Warning, this is all financial advice. You can invest in any way that will make you feel comfortable. This is just a full breakdown of the stock to help you invest into a company that will help you grow your portfolio for the long term. Thank you.
It's time to hone your skills. You'll certainly need it.
Hey, what's up, guys? This your boy Cooler at 100X. Welcome to Black Money. How you guys doing? Black people, listen. We're going to be looking into Stellantis. In layman terms, Chrysler. They actually changed the name. A lot of people don't know that. So, yeah, this used to be Chrysler. They changed it to Stellantis, which I don't know why. Chrysler would have been way better. Already messing up with the company name. Who's going to remember that? Y'all already know I like to look into companies that pay money back when you put money into it. So do Stellantis, which is Chrysler, pay dividends? Does pay an annual dividend. Interesting, which is 77 cents. Decent, but annual. So you ain't gonna see their dividend till a year later. I mean, so you can look at this as a savings account. Basically. They do pay the dividend too as well, but I would say it's a little bit more egregious. They have not increased growth at all. It's been negative. So right now they were at $1. They dropped down at 38 cents. Dollar. Now they have 57 cents. So it's not good for a company that don't even give you bread. Anyway, y'all know me. I like to look at the chart. So we have a 6, 1 year, 5, and max to look at the company. So first thing we're going to hit is the 6 months. That's not good. So we're going to look at the 6-month financials, and I have to say, wow. No good points. They've been down for a little bit. 25% down. It's not good. Well, can we get a year? Okay. All right. Nothing. Oh boy. This is not good for Chrysler. Not good. They took a big hit, 7. Then they went all the way down. This is, ooh boy. This is the lowest they ever been. It's $6 a share. It's the best time to scoop up Chrysler. If you got $7, $10 in your hand, you can be a part of a whole company. Tell me y'all was in the green in 5 years at least. Oh my, in 5 years y'all still in the red? What in the world? I mean, there's no key indicators. Usually they give you key indicators, and they don't even give you that anymore. I mean, the average deliveries, I mean, oof, that's not good. Overall company in the max, I guess they hit the interaction of a good one. So they went up 101%, which is for max. So, but man, y'all been doing horrible for the past couple years. I mean, interesting. 250K employees. Y'all have more employees than GM. How are y'all doing this bad? I don't get it. Shares are outstanding. Cool. A lot of people buying shares. I mean, damn, it's $7. I mean, you got $10, man. Y'all can own a company. I say if you got $7, just leave it there. Just hold it. That's all you gotta do. Just hold it. Earnings. Okay. Let's look what's going behind the hood. Y'all already know. Just jump right into it. Ooh, Lord, they went past. Boy, this is not good. Okay, cash flow. Net income. Wow. Okay, wow. Interesting. They didn't give us nothing in June. I wonder that. Oh, y'all was in the negative. Y'all must have been in the negative. Negative again. Out in the negative. Okay, so y'all actually profiting. Decent. Cash operations. Why do it cost so much to run this company? It's only $7 a share. 1.18, 2.72 billion to run Statless. I don't understand why to run this much for Chrysler. That's absurd of how much this company costs to run. Not understanding that. Changing inventories. Did y'all change inventories? No. One of y'all have nothing to change. And that's bad because they in the negative with that. 1.96 million for that physical year of 2025. And y'all have nothing to show for it in this year, in this past March. Oh my God, that's not good. God, dog. Cash from investing. I'm curious. Oh my God, y'all have nothing to invest at all. That's not good. Oh man, cash from investing. Y'all have none. Y'all went in the negative with that, so y'all have nothing outside of that at all. So, oh my God, this is not good. Financing. What is 5.252? Why? What are y'all financing that 5.52 billion? That's your whole income. All right, let's look at the. Oh my God, y'all have no money coming in. None. Y'all are in the hole of $2.73 billion. Then y'all drop down even lower because you have no unlevered. Y'all might as well say y'all broke. Oh my God. Lord have mercy. You really want to get in the hood? Let's look at the balance sheet. I'm kind of afraid to even look, actually. Do y'all have items? This is what I don't understand. Y'all have 22. And y'all have so much inventory. How are y'all in a negative in 300 something mil? Are y'all not buying any cars? I don't understand. Or y'all are trying to sell the company as a whole in shares. That's what I'm thinking. This is how this is working. I don't understand it. This is how y'all have all this inventory and nothing's selling. That's interesting. I don't get it. I'm just saying, because if you have all this inventory, why is nothing selling for your cash net? Your net should be way more higher than what it is. It shouldn't even be in the millions. It should be what your inventory is in the billions. So I'm still trying to figure out how did that even work in this company? How are y'all even being sustainable in this current condition? All right, total current assets, 4.2. This is decent because y'all have Stellantis, y'all have Chrysler. Chrysler is y'all total asset, so of course it's going to be the same because it's y'all as the asset. Y'all bought the shares of your own company, which is weird, by the way. But okay, doing another Tesla, I suppose. But we don't really hear nothing about Stellantis, so not really what I expected. But I guess. But overall, this is not good. Really not good. Prepaid expenses. Oh my, this is where your money going. Why? 1.37 billion in expenses. Yo, what's up, guys? This your boy Kool-Aid Man 100X. I want you to hit the link in the description below for my zero investment books. We have a quick sale going on for $7. Link will be in the description below or in the comments below as well, so you can get a chance to get the $7 deal and other things that you want to learn how to invest and take your investing to the next level. So I hope y'all enjoy. I'm gonna catch you guys there. Occurring expenses, 16.8 billion. What are y'all spending y'all money on to incur these expenses? Y'all don't even hear nothing about employees talking about y'all. So how y'all incur 16.8 billion in expenses? That's absurd. Total assets is the company. It's the same. So y'all bought more shares, 207. So, Chrysler is y'all. So total assets is y'all. Makes sense. But man, it's bad. Your portion of long-term debt is killing y'all. Everything else, long-term debt, 28. Y'all ain't come out of it yet. Long-term leases. I'm not understanding this either. Where do y'all lease y'all company's warehouses? Why are y'all leasing? Just buy the land and buy the warehouse and use it. Pay the taxes. I don't know where y'all are financing and having long-term leases. What are y'all doing? Your equity is good, but oh God, who's going to buy and pick up all them leases? Pensions, this what y'all pay to people, which is decent. Still trying to figure out how y'all doing that, and y'all got expenses. Is this the expense? Think about it. You got 4.80, 4.80, 4.74. You took a dip, so you're paying pensions. So wait, most of your debt and accrued expenses is paying people what they're due in their retirement. So before people retired, before the company was ever built, what was y'all spending the money on? Majority interest doesn't even make sense to this. So that's crazy, I would say. Let's look into the earnings. I think y'all did pretty good on that. Oh my God, this is not good. And I'm wondering why they don't have the expenses. That's ooh Lord. A lot of red here. It took a cent, 5. Yeah, y'all took big hits on revenue. I believe it's because y'all paying pensions and retirements and stock markets and shares, and y'all paying all these leases and finances. So y'all taking a big hit in y'all revenue like crazy. And I think they're trying to make the money off the share because the bump is crazy. But there's a company would you invest in for long term? Yeah, but volatility wise, I don't know. Will they even be around? All right, let's jump into the key issues, which is the turnaround and the trajectory of earning, recovery, and credibility. So they're trying to make a comeback. So how y'all gonna do that under GM and Ford? Because right now they battling. You got Ford going for Tesla. You got GM trying to make money off their own people, basically, with contracts. So, but this is the bullish view and the bearish view. So we're gonna look into the Inman Mountains of outperforming rate, describing the situation of the turnaround progress despite the external headwind of JP Morgan. Keep a buying raise with 11.61 price target. Now that's interesting. So they're trying to make a price target of $11.61 a share. I don't see it. I don't really see that happening. Also maintains to buy 11 point. I don't see this happening. Short profitability and free cash flow. They have none. I figured this was going to be a problem. They have no money. No one's buying anything. Why do y'all got so much inventory and no one's buying anything over the next 12 months? Over the next 12 months, y'all need to create something, commercial, something. I don't get it. Mega Merit downground style is unperforming at 5 point. I figured that they even unperform at 5.50. They're expecting them to go down. Bank of America. It's busy arguing the current validation already implied the turnaround has yet to be validated. Trust the financial hold reflects skepticism and limit to no evidence yet to sustain cash flow generation. They have no money. None. No money. No money. I hate to say they have no money coming in, and that's weird. How are y'all paying people pensions? Where is you getting the extra bread? And you see here the stylist of the 6-1 here normal. They're trying to get to the 6, but they've been hidden under. For them to have $11.61 target, that's where they have to create cash flow. But what have you heard about stylists, man? What have you heard about Chrysler, bro? I've not heard anything about Chrysler at all. So that is a big feat. They had 798, but hitting that 1161 mark is going to be, if I was to say, if there was to hit this 1126 mark or 1161, it would probably have to be within the year. Have to be within a year. That's the only way I can really see them, but they have to create cash flow. They don't have nothing coming in. That's weird. I don't understand how y'all functioning as a company with no unleveraged cash or cash flow coming in, but y'all are paying pensions and have more employees.
What is an analyst consensus? Analyst consensus refers to the average of different analysts' estimates about a stock's or security's performance, particularly regarding future earnings or financial metrics. It is an aggregated estimate that helps investors gauge market expectations and is crucial for financial communication. This consensus can also assist in identifying forecast errors made by management.
It's not making any sense. So let's look at the analysts. The analyst consensus, they consider this company a hold or neutral. Now, long term, yes. Chrysler, long term for Chrysler, I can see Chrysler actually being sustainable. But for them to say they're trying to range from 889 to 1120, that's a big feat. Now, the 889 can be achievable, but this 11, and y'all talking about going this 11 route, I don't think it's happening. Within a year, or if not a year of, or I would say 2 years max, a year and a half. Let's say a year and a half, they hit the 11 mark. So would that be having extra cash flow in to hold? Or would this be a stock you will hold just like, all right, I'm going to hold it because it is where it is now. I can see this in the next couple of years. It's going to be profitable. Then on top of that, Chrysler has been, paying their dividends. So you can look at this company as a savings account. So you're always going to get some on the back end regardless, which I think is doable, but I think it's not enough, because if you're investing in something and it dropped to this, interesting. And this is 1, 2, 3. And what's really tripping me out here, the 22 and 21, they paid twice in 22 and 21. So they used to be a monthly year pay, then they switched to a year. So what I'm thinking is, will they keep this profit going to have it be more investable, to be able to invest long term with them? What are they doing? What are they doing with the money? What are they doing with the inventory? What are they doing with the assets? What are they doing with people's pension? What are they signing off on these contracts for people? Because you see these 3 big threes making a big profit margin in the capital gains, but nothing being done to the company be improved. Now that's something you have to put together for your own reasoning to invest into a company like this, or if not, work for a company like this. Is your pension guaranteed? Is your retirement guaranteed? Is your investment guaranteed? Or will you lose it all in the end if this company just bails out? So that's really something you have to think about as far as investing into these big 3. And I have done all 3. So I hope you enjoyed this video. I'm going to catch you guys on the next one.